Now let's bring in Chris Murphy, Susquehanna co-head of derivative strategy. Chris, do we commonly see the expectation of an 11% move up or down in a nearly $2 trillion market cap stock?
Hey, no, we actually never have. If you multiply the market cap by the implied move, it's the biggest earnings expectation of all time. We went back and we looked through COVID when Apple was still pretty high market cap, and we really have never seen this before. An implied move in market cap after earnings of about $200 billion. That's the entire size of a company like Disney or Cisco. So safe to say we haven't really seen this before.
So, there's a difference between trading and investing. So not implying that people should do anything here, but I also wonder to what degree is this move, if it happens, and there are bets that it will, going to impact the market overall or other stocks in this AI cohort that have also been pretty volatile lately?
I mean, this is a major pivot point for this, current AI semi-tech bull rally. I mean, it has showed signs of getting tired. If you look at the NASDAQ, it's basically flat over the past month, while NASDAQ volatility, the VXN is one way to measure that. That's been moving higher. So expectations are sky high, even just to meet expectations. So, that might be why you're seeing the stock pulling back a little bit today. I think the rest of the market is kind of queuing off this earnings on tomorrow.
What kind of circular effect can some of this options activity have to, those who are equity holders, in the sense that if they do have a sizable impact, after the print crosses tomorrow, what does that mean for those who are maybe, say, more momentum traders or even mom and pop traders who are kind of watching the activity and having FOMO either to the upside or the downside?
Surprisingly, probably not as much of an impact as you would think. Over the last 2 weeks, this implied move, that 11%, that's kind of been bid up. So that's telling you that a lot of people are buying options. So what you might actually find is after this event, we might see a sharp initial move, but then we're going to see a lot of options selling. That's actually going to mute volatility. Now, a lot of that has been buying upside calls. Now, if the stock sells off, those calls are kind of going to just go away and not need to be hedged. So maybe not necessarily a ripple effect out of the options if we're assuming that a lot of people are buying options ahead of this event.
In a way, what this reminds me of, Chris, correct me if I'm wrong here, is Meta, formerly Facebook, in early 2022, right? In the sense that it's a pretty big stock, not as big as Nvidia is now. And what we ended up with was a big move that got people arguing that the narrative had changed. Now we can see to a degree that's greater than it actually did. So what did you see in the options market, not just in Meta, but around related names after that big move in 22?
Well, the options market is just continuing to grow, and it's usually, really smart. If you think about it, everyone's looking at Nvidia. There's a ton of options being traded. You can feel pretty comfortable with the 11% move being relatively fair. Now, when a stock really catches you off guard, like Meta did, as you mentioned, or 3 and 4 quarters ago, Nvidia really caught everybody off guard, beating by an incredible amount, and you had these massive 14 and 24% moves higher in the underlying. Now that's kind of being expected. Obviously Nvidia could surprise and really have a worse number, but really it seems like this incredible performance is now expected out of this stock. And part of the reason we're seeing that 11% move is because of those big moves that we saw recently. And it might even be a little bit overinflated.